Welcome to today's explainer. So if you've gone solar recently, you might be looking at your upcoming 2026 tax prep and honestly sweating just a little bit. But what if I told you there's a completely legal, super straightforward way to save thousands of dollars that you thought were just gone forever? Well, let's dive right in.
Okay, let's talk about a pretty terrifying thought. Is your solar tax credit actually bigger than your tax bill? I mean, you invest heavily in upgrading your home to solar, you qualify for this massive tax credit, but then the panic sets in. Your current tax liability is just way too low to use it all right now. So are you going to lose all that immense value?
Cha-ching.
Yeah, hear that? That is the sound of your money staying exactly where it belongs, right in your pocket. Let's say you have exactly $4,895 of unused credit left over. Here is the absolute best news. Not a single penny of that vanishes into thin air. No way.
And that brings us to the real hero of our story, 26 U.S. Code 25DC. I know, it sounds like some super intimidating CPA jargon, but it's literally just the official code for the tax credit carry-forward rule. In plain English, you have the legal right to roll over your unused residential clean energy credits right into future tax years. If you can't use it today, you just push it to tomorrow. Simple as that. But you've absolutely got to beware of this one specific trap, and that is net tax liability versus gross tax. You have to calculate your offset correctly here. So many folks mistakenly look at their gross tax, they get totally confused, and they miscalculate exactly how much credit they can actually apply. You need to focus strictly on your net tax liability offset. That way, you're not calculating your rollover based on the completely wrong starting number. Now, tracking this taxable year rollover, it's actually surprisingly simple. First up, you just file IRS Form 5695. Then you're going to check line 12, because that reveals your current limits for the year. But the real magic, that happens on line 16. That is where you literally calculate and lock in your carry forward amount for next year. No confusion, just follow the lines on the form.
Right about now, I know the burning what-if scenario you're probably screaming at your screen. But wait, what if I move? Well, get this. Selling your house, your carry forward actually goes with you. It's attached to you, the taxpayer, not the physical solar panels on the roof of the house you just sold. So even if you pack up the whole shebang and move across the entire country, you absolutely do not forfeit your remaining credit. It stays yours, for sure.
So are you ready to maximize your solar carry forward this year? You've got the legal code backing you up. You know the crucial difference between gross and net liability, and you know exactly which lines to fill out on your forms. Go claim what is rightfully yours. But, it kind of makes you wonder, if a super simple rule like this can literally save you thousands, what other clean energy incentives are just quietly hiding in the tax code, waiting for you to find them?